behalf of Biz Talk Today TV and Crosscheck Media, welcome everyone to a very special Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I'm joined by my friend and co-host, Tobin Smith, out in sunny and scorching hot Scottsdale, Arizona.
I
Don't
know,
tell me it's
suck
not
it,
hot.
losers.
But listen, I know someone who is coming back to the show. She has been on maternity leave. Everyone is wondering where she has been because they all want to know, is she ever going to come back to Buy, Hold, Sell? We've received countless notes about her, and we knew once she went back to work, she had to make her first stop
Heck
here.
yes.
It's Danielle Shay. She is the VP of Options at Simpler Trading. She's our Buy, Hold, Sell contributor because she is the options expert. She's our only options trader that we have on the show. Danielle, welcome back to Buy, Hold, Sell.
Thanks for having me. It's great seeing you guys again.
Absolutely, absolutely. Well, we're so happy that you're here. There's so much to talk about, one of which is the markets today. And as you know, the markets have been up and down ever since President Trump took over again in January. And here we go again. We're talking about tariffs. This time it's about auto tariffs. But you had a rocky market today. What do you think about today's price action, though? Is this what you're expecting for the rest of the year, or do you think things might stabilize?
Well, I'm hoping things might stabilize, but I think for right now, volatility is the name of the game. And I think the biggest issue with the indexes is that we didn't really see enough follow through to the upside. I mean, right now we have the NASDAQ and the S&P both that are below the 200 simple on the daily chart. That's a critical
200-day simple
zone.
moving average.
Yes.
Okay.
That is a critical
Not
zone.
everybody is a guru like you, girl. You got to share it, what you're talking about.
This is a critical zone of resistance. And so when you're looking at that on a technical basis, it's just not looking too good. So what we need right here now is we're going to need some sort of bullish catalyst to get us back up through those areas of resistance. And ideally that will be earnings season because we do typically see bullish seasonality going into April. But if that doesn't come through, that's where we're looking at, lows on the year. So
yeah,
Okay.
I'm sort of when you look at the quarter, this first quarter, I change my mind like every other day. If you look at, for me, the fundamental dude, it is just hard to imagine. I can super imagine that healthcare is going to do well. I can super imagine, that I like to call, digital utilities, things that you have to subscribe to, or waste management, or, things that you're not going to stop using. But on the margin or at the margin, depending on what finance school you went to, you have a situation where you could disappoint big time. And what you're saying is you're looking for the reverse. You need to see some positive reinforcement. Otherwise, 200-day simple moving average is going to turn into the 250-day simple moving average, right?
yes, that's correct. And so, oftentimes what we'll see in situations like this where we have volatility to start off the year and we see a bit of a correction, if an earnings season comes up that is disappointing, that's when it can really send further shocks through the market, especially when the market is already nervous about tariffs and consumer spending. If that actually comes through in numbers where these corporate executives are coming out and they're saying, hey, guess what? This is impacting our bottom line. That's where we're going to have further issues.
Okay, so let's talk about the tariffs then. The big news story of the day with the auto tariffs. And now the president he talked about this after the close yesterday. Clearly, there was going to be a distinct reaction when it comes to the automakers. We saw GM and Ford down quite a bit today, but we saw Tesla up big today. I know that you have been tracking Tesla. What do you think, though, right now? I mean, because I know that you have a proprietary charting system that you use, and we'd love to show the audience it if you have a moment.
Sure.
So what do you think,
Let's go to the charts.
Let's get to the charts because I want to know. I'm hearing about the earnings hot zone here, Danielle. Can you get into that a little bit regarding Tesla?
Sure. Yeah. Let me go ahead and pull up my charts for you here.
Okay, no problem.
See, she's doing our work for us. I like that a lot.
Well, first of all, here, I can just go ahead and show you what I was talking about in the NASDAQ. I mean, look at this. This is just, we traded higher and then we just got this womp womp move. So,
You mean, is that like, wah, wah?
yes, exactly like that. Yeah.
Okay.
So that's not really something we want to see, but that's what we got today. So
Okay.
anyways, here is Tesla. This is my earnings hot zone. So basically what it does is it charts just a bunch of earnings data and statistics. And so what you'll see here, these bubbles that appear are the overnight gaps that have occurred after earnings reports. So for example, you can see last quarter it gapped up 5.6%. But what I will point out is that after it gapped up that much, look how much it rolled over afterwards. So not really that bullish, as you can see.
Not really.
Not really. The quarter before that, amazing move, 14.5%, and we had follow through, right? So that was amazing. But when you had a quarter following that where you didn't get continuation, that's kind of where it turned around for Tesla. But the main thing that I wanted to point out using this chart is the direction that the stock trades going into earnings, because one thing that I really like to trade in the options market is going to be directional moves before the earnings report, because what will happen is you have options premium before that report, and that options premium will start expanding. And so it can provide a variety of opportunities for buying calls if you have the premium expanding. Typically that's something that I like to do. I also like to buy butterflies, but you have to know the direction, right? So if you can time the options premium going up plus a directional move, that's where you can get some pretty good options movement. So with this chart, what it does is it highlights the direction that the stock moves both before and after earnings. So in this case, you see all of this red right before earnings last quarter. That's because Tesla was down in the 21 bars prior to the earnings report. Quarter before that, Tesla was down in the 21 bars prior to that earnings report. The one before that, yes, it's true, it was up. We had a really good move right there. But
yeah, but that's all sentiment, though. I mean, my only question for you is, yes, the chart is showing exactly the direction, but there's no chart for sentiment. If you could have a bar that showed, the expectations of Trumpism after the election and no Bidenism, and but there was nothing different in the company. It was just investor sentiment, particularly young males who trade stocks.
Yeah, Toby's right about that, because the political affiliation is likely damaging Tesla, despite how many
Likely.
cars that they sell. I mean, okay, I know
yes.
it's an obvious statement, Toby,
Yeah.
but Danielle, though, are you able to? Is there anything? I mean, is there like a change in volume, a trading volume, or anything
Ooh.
when you're looking at these charts?
So, I mean, for me, it's primarily sentiment on a chart, because when you look at that earnings date and then you can notice that people have that in their mind, right? They're thinking, oh my gosh, what's happening with Tesla right now? In this particular instance, you have people torching Teslas, keying Teslas, Doge, Elon's
Yada,
proximity
yada,
to the
yada.
president. Like, we have a long list of reasons why the sentiment is not good, right? And so what will happen is, as the news and media starts bringing up the fact that Tesla's earnings is coming up, people will say, oh my gosh, I don't want to be in that stock because of all of these things. And so what will happen is, during that 21 bar time frame, if that sentiment is not good, that can give you a trading opportunity. So even though it was up today, with the tariff situation, I still am maintaining the fact that I do think that it is going to trade lower going into the earnings report, because it traded directly into this critical area of resistance. I mean, you can see that there's a pretty consistent pattern where the stock has traded lower going into earnings quarter after quarter after quarter.
Oh, I like those little pink arrows. Those are cute.
So, I mean, for me, I take the news into account for sure. But then I combine that with patterns and technicals on the charts.
Yeah, well, it's interesting you say that, because I'm the fundamental guy, and then over the years, I started using technicals to support my thesis, really. That, for instance, thesis on Tesla, it happens to be a very high yield of fund from the YieldMax people called Crash, CRSH. And because of all the things you mentioned, the reverse on sentiment, we were long the crash, and then we were selling, options to get more revenue, and we were making stupid money. We were making like 12% a week on this thing crashing, and we got this pop because of blah blah blah. But the earnings, when you look at the sales in China down 40%, the sales in Germany, Norway, Sweden, Europe, it's impossible for them to not, fail to the downside on earnings. Is that all priced in, do you think?
Well, and that can be an issue when it comes to trading the actual earnings report, is sometimes the sentiment is so bad and that people think that, right? They say there's no possible way that, it could be good. But I will point out that that's actually what happened right here in this quarter, where it gapped up 12.6%, was because the sentiment was so awful and the stock had been going lower for so long that the report wasn't as terrible as people thought. And so it ended up gapping up, but that's why
But isn't that just short covering, Danielle?
Yeah, exactly. Yes. A lot of that can just be short covering. And that's why I separate my pre-earnings trades and my actual earnings trades. So you can, trade it to the short side before the report, in the 3 weeks before the report, because of the sentiment. And then once you get to the actual report itself, that's when you can make a different trade and you can decide, maybe I need to take the other side because I think the sentiment is so bad. But yeah, that's why I like to separate those two ideas.
Now, have any Wall Street firms come out with any type of guidance pre-earnings? I have not heard anything. I'm just curious if any auto analysts out there have been publishing any type of warnings or anything for that matter.
Well, our buddy Dan Ives has not come out with earnings. He's come out and said that you have to look through the earnings, and you have to look at the robotics, and you have to look at the the FSD self-driving in Austin in June. And so he's using future fundamentals. I believe our wonderful guest is saying, okay, that's happening in June and September of this year. I'm looking at the here and now, and the here and now from a fundamental standpoint is only one way place to say. Our sales are down in every major region by a significant amount. We get a tailwind from the fact that we make our cars in the United States and sell them in cars, so that certainly helps us. But they're not exactly cheap either, Todd. To pay $65,000 for an EV, unless you're in areas where you have a huge amount of charging stations, and then the fact that he's alienated his core constituents, if you will, his core buying group. I'm going to be short it, Todd. Danielle, what are you going to be doing?
So, it's interesting when it comes to the time frame, right? Because I completely agree in the long-term plan for Tesla. I am a shareholder. I have a pretty decent sized position in it, and I am going to continue to hold my Tesla shares on that long-term basis for a long-term plan, right? But as an options trader as well as an investor, I'm going to short it before the report in the next few weeks. But I will continue holding my long-term shares in different accounts.
So to put it in perspective, your brand new baby daughter, when she becomes 3 years old, that would be a very wonderful gift for her if the robotics are working and the self-driving is working and he's got the hell out of the United States government. Is that what you're saying?
Yes, that's actually what I do for my kids. A dollar cost average. I have stock accounts for each one of them. And the first group of shares that I bought for my daughter that was just born in October is Microsoft. So I've been buying Microsoft in her account. My older son, he has a bunch of Tesla. And basically what I do is I just dollar cost average. I add money to their accounts every single month. And then I buy shares in companies that I think, in the next 20 years
Wow.
Going to be worth a lot of money. So
Yeah.
exactly what you said.
I
That's
love
exactly
it.
what you do. That's
I
right.
love it.
That's I tell young parents that all the time. Set up the 529 plan and put a lacrosse stick in their hands, and you'll be happy. Absolutely. So let's close it out there, guys. And also, just a quick reminder for everyone who's listening to the audio version of this show, Buy, Hold, Sell. We do offer the video version, obviously, which is what you will want to check out when you would take a look at this chart and check out the
That's
hot
true.
earnings
That is
notes.
a dead sexy chart right there. Let me
That
tell
is
you.
really good. And I know there's going to be more charts because we're going to get some more after the break. But with us today is Danielle Shay. She is the VP of Options at Simpler Trading. She's a resident options expert, and she's back in business right now, guys. She has a lot more to say. So stick with us after the break. We'll be right back.
Buy, hold, sell, brought to you by Crosscheck Management.
You make me sparkle, you make me tingle, even the stars are brighter when I'm with you. And when I surrender to a tasty kiss or two,
Martini and Rossi iced tea.
you make me sparkle, yes,
Make the moment sparkle.
Welcome back to Buy, Hold, Sell. Well, with us today is Danielle Shay. She's the VP of Options at Simpler Trading. And Danielle, you're back in business, you're back at work right now, and it's great that you're starting because we have earnings season that's coming up in a few weeks. And one of the companies that everyone's going to be paying attention to is one of the, really, I would say, the pioneer of the Mag 7 stocks, and that's Netflix. So with that earnings report coming out, they've had so many great shows. You had The Night Agent, which was very popular right now. Toby, you got to watch The Night Agent if you haven't already. It's a
Dude,
wonderful.
I've seen all of them. Are you kidding me?
I know, but it takes like 2 years till the next season comes out.
Yeah, I know.
Takes
Well, because it's $35 million a freaking episode or something ridiculous.
something crazy like that. So let's talk about that, though, Danielle, because if it does cost so much for producing great shows and great entertainment, what's that mean for the earnings report?
Well, that could definitely impact the earnings report. But I mean, here's the thing with Netflix is Netflix was down for quite a while due to the writers' strike. But the last 3 quarters, I mean, they've done really well, which is why I like this stock for the upward trajectory that it's on. And I think it will continue to be on, because if you take a look at the charts, I mean, you can see here that the last 3 quarters, it's had very nice gaps. Last quarter, it gapped up 14.8% after earnings. The quarter before that, it gapped up 7.3%. The quarter before that, 2.7%, not that big of a deal. But you know what I love about these gaps is that this was a really nice breakaway gap right here. This one did come back to fill, but it has since recovered these critical zones of support, and it's doing significantly better than most other tech stocks right now, which are, all the way down in here.
Well, let me play fundamentalist for a second, Danielle. So, number one, its business model is subscription.
Mm-hmm.
So once you've amortized the cost of producing your shows with, let's say, 40% of your subscriber base, the next subscription you get in is a 95% profit margin. Number one. Number two, most of their growth in the last 12 months has been outside foreign, really the last 2 years. But the business model combined with the fact they have some really great shows, and now they're adding professional sports to the mix. It's a great value as a consumer, but as a business model, it's a fantastic business model. And I come from the subscription business where we know that once we have our hard costs paid for, the next subscription is minus 100% margin minus the credit card fee. So I'm totally with you. Again, I think we should just be doing me, Mr. Fundamental, you, Ms.
Technical.
Technical, and now we have like a meeting of the minds.
Yeah, absolutely. I mean, it definitely it's gold. That's what I would say. But it is interesting because Toby is right. When you start thinking of the streaming platforms for years, it was only about entertainment. And now they're starting to get into the live programming with sports. I know at Crosscheck Media, we've been having discussions for years now about being on an Apple TV and being live from the New York Stock Exchange and doing a buy, hold, sell type of show, because that's something they do not offer right now is live news programming, and that's going to be the real category killer for all these
Well,
streaming
I think you're right,
platforms.
but let's also not forget that they also added a ad-supported tier, which
Right.
they never really got going until the last year. And all of a sudden now people said, well, you know, $19 a month, I don't want to pay, so on and so forth. Or now you have people 21 years old to 35-year-old that have never watched linear television in their life. Everything is streamed. That ads again. That every time they sell an ad, they already paid for the content. They're not paying
Right.
any additional money for the content. So every ad they sell, 95%, 90% profit margin minus whatever the ad agency gets. So, dude, I'm with you. And then I'm so excited that I can see the chart, and I'm long Netflix. So, woo!
Well, I want to ask you that, Danielle. This chart looks beautiful, and it's clearly showing a lot of bullish sentiment for the stock. But will your charts give any type of a forecast? I mean, is there any upside ceiling that a trader will be focused on?
Sure. So I use Fibonacci primarily as a part of my upside target forecast. So if you come down to the chart, basically looking at the previous high and projecting that off of the most recent low, that's going to give me a price target of about $1,121 upwards to $1,200 a share. But I would say for the actual earnings report, typically they're going to give you the market maker move. This is Thinkorswim, by the way, that I use. They're going to give you the market maker move for the actual earnings report. It'll probably be, I don't know, maybe $40 or so, just a guess. And so I would say for the earnings report, once I have that, then I could come up with an actual projection for a trade over the earnings report. But I would suspect it would be up around 1,000, maybe up at a
Hey,
$1,050.
it's a big round number.
Yeah, because in the
Danielle.
options market, you have to use those big round numbers. I
Yeah.
overlap the Fibonacci targets with the big round numbers because that's where you have that high open interest and volume, and that's where these tickers will typically go and bounce to, and then that's how you can set up your butterflies and your spreads. And so,
Oh,
you
you're
definitely want to
talking
be
sexy
using
now. I love it.
yeah, you definitely want to be using those big round numbers for sure.
Yes.
So
Well, I'll tell you, Danielle, we'll do a show one day for civilians in option trading so that they know Fibonacci is not a vitamin you take in the morning.
I thought it was a new Ferrari model. So let's switch gears on the tech side though, because one company that will be reporting before Netflix is Amazon, and Amazon's got their big Prime Day coming up. Although that will be going into the next quarterly
Yeah.
earnings season, but they did just have the holiday shopping season. So can you give us a little bit of background on how the trading is going to be looking at for Amazon?
Sure. So, I mean, Amazon has been a little bit mixed. The last 4 quarters, we have 2 quarters that traded lower, 2 quarters that traded higher. If you go back even further, last year they were doing really well. They were having, regular gaps higher, and then you were seeing
Yeah.
follow through. So, sometimes what you'll see with some of these companies, and Microsoft kind of did the same thing, where Microsoft used to be one of those companies where I could just go long over earnings and close my eyes and it would work. But it's gotten a little bit more dicey recently. So Amazon's kind of been a little bit of the same. With Amazon last quarter, it gapped down 2.7%. And I really do not like to see this happen where not only does it gap down, but it keeps falling after the report. That's not a great sign. But I do still like Amazon here, and I have been continuing to buy Amazon shares over the course of the last year. Primarily because it's sitting on this critical zone of support. It's at the $200 price point. That's, key psychological value. It's also at this critical 200 simple moving average. And it has earnings coming up. The earnings report is actually going to be on May 6th is what it's projected to be. So we'll have to see how some of the earlier ones report. Typically what I do with earnings season is I look at JP Morgan, Netflix, Tesla, And it'll kind of give me an idea for how the market is reacting. And then as we get into Microsoft, Apple, Amazon, it'll give me kind of a better idea for how I want to position earnings trades. Because, for example, if Netflix comes out and it surprises and Tesla surprises and they're trading higher and everything is good and great, it gives us a little bit more positive momentum to make bets on the companies that are reporting later in the season, like Amazon. So that's my preferred situation, but it can also happen the other way where Netflix comes out and Tesla comes out and JP Morgan comes out, and then, the market starts rolling over because everyone's saying, this is terrible.
Well,
So
let me present the other flip side of that. Again, I think we're like cousins from a different mother. Amazon, as in all the Mag 7, were what we like to call a source of funds for a rotation out of the Mag 7. So if you run a portfolio like I do, and when I was a mutual fund manager, if you're in a stock over a 2-year, 2.5-year basis that goes up 290%, and still at a reasonable valuation, at some point in time, the portfolio is too heavy. You have too much Amazon. And so by the rules of managing money, certainly at large mutual fund companies, you have to reduce your exposure because you're breaking the laws that some idiots set up at their investment committee, right? So Mag 7s, just by definition, the air got so thin up there, and all the great expectations were built in. And oh, by the way, they're going to spend $350 billion on AI infrastructure that no one ever thought about ever. It was a source of funds. And once all those sales have come out from people who were selling simply because they had to sell, your chart is showing that we're getting to that point that the people who had to sell have sold. And the news on Amazon taking out their CapEx stuff is they're crushing it. So I'm with you here. I would be long Amazon if we get ahead of that little purple line down there.
Yeah, and it would be interesting to see what they actually make off of Prime Video. I mean, with the NFL last year, I know that they were just making a boatload of money, and what that's going to translate. I mean, Apple has baseball, and then they're starting right out the gate. I mean, the Orioles are on Apple TV tomorrow night on
So that means like 25 people will watch tomorrow, Tom?
But think about that from a sports programming. Think how they're going. I mean, this is a company that started selling books, and now they're at the live sports programming for Amazon Prime.
Well, they're also a $800 billion market cap company. Look at
amazing.
Ad supported. They all have now ad supported channels.
Yes, they do.
And again, if you've already paid for your content, then streaming it costs you about a penny a person, and the rest of it is on those ads you sell. Then the other great thing about Amazon is they can go to their tens and tens of millions of retailers and say, oh, by the way, this group of people really love buying your Birkenstock shoes. So Birkenstock, why don't you run an ad on our Amazon site, but also on our Amazon Prime, and we'll only send those ads to people that we know have purchased Birkenstocks on our web. No one else can match that, Todd. I mean, no one else can match that. Their data. That's why Facebook is so great as a advertising platform, because they know exactly what Tobin Smith clicks on and talks about and so on and so forth, much deeper than anyone else would ever have. So I'm a big Amazon fan. I'm glad it pulled back here because we're going to be adding it back into our portfolio.
Yeah, absolutely. Absolutely. So let's go over one more stock, and it's the company that actually kicks off earnings season, and it's JP Morgan. They're releasing at 7 a.m. on April 11th. And Danielle, what's the chart looking like? Because with financials, I would imagine all of this volatility is great for trading. I would imagine that would be a big bullish sign for JP Morgan.
So I love the look of JP Morgan.
Yeah.
I mean, the chart has been incredibly strong. What you'll see here is that it gaps up almost every quarter after earnings. And what's interesting is that these 2 quarters here that it gapped lower, that was when buyers came in. So, I mean, that's really bullish whenever you see a company that gaps lower and then it ends up, buyers come in and it pushes it higher. So I like to see that a lot. Nice steady pattern, higher highs, higher lows, just beautiful trending chart. This is something that, when we have new traders come into our trading room, I typically will tell them, if Tesla is too much for you, if Nvidia is too much for you, go and trade JP Morgan, like trade McDonald's, trade Walmart. It's going to be a lot more forgiving. The options are a lot cheaper.
Yeah.
So, that's people will come in and they want to trade Nvidia immediately, right? But it's like, hey, do you want to take the Ferrari out first, or do you want to learn how to drive the Ford kind of thing? So,
Right.
I like JP Morgan. I think it's a great stock. I think that it typically does well over earnings. Yes, it has had a pretty big downfall here recently, but I will point out that when it fell down into this critical zone of support at 230 and at the 200 simple moving average, and by the way, this was right when it entered the earnings hot zone, 21 bars before earnings. That's when it started trading higher going into that earnings report. So the fact that it's been trading higher prior to this earnings report demonstrates bullish sentiment. And then all we need from it is we just need the earnings report to come out. We need their CEO to be nice and positive. That would be really helpful.
Absolutely.
Well, let me play Mr. Fundamental again here. That little green, that straight up green was the sentiment that the deregulation that was going to be coming from the Trump administration would allow merger and acquisitions to start rolling, to have acquisitions start rolling again. And that all would drop to the bottom line of JP Morgan. When it turned out, the day after the inauguration, that he was going to make 75 changes every week that had nothing to do with deregulation, had nothing to do with merger and acquisition. In my mind, that's why it dropped, Danielle. It had nothing to do with their earnings as much as it had to do with essentially removing that sentiment of go, go, go.
And the broader averages have been selling off. I mean, there's a pull down effect.
Right, but again, no bank I've ever seen gapped like this out of the election, because there was, the promise of deregulation, the promise of now allowing for acquisitions, M&A, et cetera, is just their wheelhouse. It's been their wheelhouse for years. When it became clear that was not going to happen immediately, those people that bought the green going up, expecting, sold because their expectations were not being met. Then that selling begets selling, because it gets the the momentum algos say, hey, it just went down here. My rules say I have to sell. But I love what Danielle showed us here, is that at the purple line, that to me is what I would call the real buyers. They're people who buy on fundamentals, and they could see the forest through the trees. Boom. So I'm telling you, man, Mr. Fundamental, Mrs. Technical, you put them together, you're going to make some money.
It's some solid stuff. So let's go over one final item, and that is gold. Goldman Sachs came out today. They put a price target of gold at $3,300 an ounce. It's a little over 3,000 right now, up 1.5% today. Danielle, do you have anything on the charts that's going to give us a bullish or bearish sentiment on gold? Because I'm looking right now at the corner
That looks
of my
like
eye.
a Viagra trend to me, okay?
And this thing is just, woo, it's just skyrocketing. But let's say you.
So, I mean, this chart looks great, obviously. Beautiful trending chart, nice green candles. We have very steady moves down into the moving averages, which is exactly what I like to see. For me, the buy zone was right in here when it was consolidating. You have that consolidation that's occurring in the direction of the trend. You can also see that it consolidated right here before it took off, and it consolidated right here before it took off, and it consolidated right here before it took off. So at this point, it's really nearing price targets for me. Obviously, it looks great, but if you throw some price targets on here, it's already met my first two targets, which would have been 28.72 and then 29.62, or let's call it 3,000 for good measure. And then the next target is going to be 3,200 in my book.
Okay.
Well,
and that's
again, Todd,
reasonable.
yeah, on the fundamentals, the reason why it spiked up is because the banks that are holding trillions and trillions of dollars of gold bullion were assuming that there was going to be a tariff put on gold. So they moved their gold or sold their gold in Europe and bought the gold in the United States, before the tariffs. We've had the largest move in gold from being sold in Europe to being bought in the United States in the history of gold on a dollar and euro number, and that would complete, you know, the fundamentals behind that spike up, and they're not going to stop doing it, because if you make a very small margin being a gold trader, and all of a sudden there's a tariff on there, you're not going to make, you're going to lose money on every trade you make. So there's a fundamental reason. Put the fundamentals and the technicals together. I'm a 3350 is my target, and we use a miners ETF that's 2x the junior miners, because what the last part of a gold run, if you've been doing this as long as I have, is that the miners finally start to move because they have so much gold at such a low cost, and now it's profitable for them to pull it out of the ground, and the junior miners particularly. So G George David X-ray U as in Unilever. GDXU is the play we use on gold, and we're still long, and you can buy, you know, call options, you can sell put options, etc.
Yeah,
Oh,
it's
look
really
at that
amazing.
chart.
It's
She's
an amazing
lovely.
chart. Amazing. And I know, and it also pulled silver up actually across $35 today as well. And we have had a number of guests, Toby, as you know, on
Yeah.
buy, hold, sell that have been very bullish on the metals over the last few weeks. So I'm certain that that sentiment's going to continue well into summer and likely into the last part of the year too. So
That is a gorgeous chart there, young lady.
it's amazing. It's amazing. Danielle, you've been awesome. We love having you on Buy, Hold, Sell. You bring the charts, the hot earnings zone. That's got to be a hashtag, Toby. We're going to put that on some bumper stickers. I love
I don't know,
that.
man. I'm worried about DEI and getting in trouble. Okay. All right,
There
maybe
you
not
go.
anymore. Maybe not
Yeah, I
anymore.
don't think you have to worry about that anymore.
All right, good.
There you go. So Danielle, thank you once again. And to follow Danielle, follow her on X at Trader Danielle. She could give you all the setups, everything you need to know. Follow her on LinkedIn as well. And I know you could probably just find her at Simpler Trading. So that would be the place
Yeah.
to be. So
I always look at her charts first. Trader
Excellent.
Danielle.
There you go, Trader Danielle. That's the place to be. So Danielle, thank you once again for joining us on Buy, Hold, Sell. We cannot wait to have you back on, especially with earnings season kicking off.
Particularly to see if she's right, Todd. That always is nice too.
There you go. Absolutely. So that was great. So coming up tomorrow, or next week, I'm sorry, tomorrow, Barry Ritholtz is going to be on with Jeff Hirsch on WealthWise. We have Sylvia Jablonski is going to be joining Toby and I on Buy, Hold, Sell. She is the CEO of Defiance ETFs. That's next week. And the week after that, we have Katie Stockton is going to be on a one-on-one exclusive interview with Toby on Money Mavericks. So a lot of great shows. You definitely want to watch all of them. And we appreciate you sticking with us. So on behalf of Danielle Shay and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by Crosscheck Management.